Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and after all these years, if I had to put one video, and it's not about XRP specifically, but it's about finance, this right here is one of the most important videos that you'll ever watch. I've played it a long time ago. It's worth watching 100 times, folks. Watch this, because right now, well, especially with these market pullbacks, the smartest thing I ever did was created a Roth IRA, and then with iTrustCapital, then I went and who is my partner, by the way, and then I went and bought XRP in that Roth IRA. Best thing I ever did. Listen to this.
Public article, a new one, published this morning, highlighting how tech mogul Peter Thiel turned a Roth IRA account into a $5 billion tax-free piggy bank. Robert Frank joins us now with more. I mean, well, let's talk about it, Robert. What a brilliant move right at the outset to see that this could be done and how it paid off. It's really an outlier, but there's quite a few of these guys that got a couple of $100 million, not $5 billion, but they've grown these things to a couple of $100 million.
Yeah, I mean, Warren Buffett, Bob Mercer, both of them have tens of millions in these accounts. Let's just go back and explain what this is. As you mentioned, the second in this series of articles from ProPublica looking at how the wealthy use loopholes in the tax system to lower their income taxes. This article says that billionaire Peter Thiel used a Roth IRA to shelter billions from taxes. The report saying Thiel grew his IRA from $1,700 in 1999 to $5 billion in 2019. Now, if he waits to withdraw that money until he turns 60, that will be in 2027, he can start withdrawing those funds without paying any income taxes on that as it has grown over that time. Now, most IRAs have a limit of $6,000 a year in annual.
I think that number is $7,000 a year, and this is after-tax money. So you can put, I believe, $7,000 a year into the Roth IRA, and then when you take it out at 59 and a half years old, it comes out tax-free. Tax-free.
Contributions that was installed just to prevent this kind of abuse. But Thiel was able to get around that by basically buying shares of PayPal at the time, which he was a co-founder of back in 1999. He paid less than pennies per share for that. And then as the value of PayPal exploded, the value of those shares exploded tax-free inside the IRA. And therefore, that is why now in the future, at the age of 60, he can withdraw it. Of course, the Roth IRA, which was created in 1998, was aimed at helping middle Americans save for retirement. The fact that now it's being used as a tax shelter for billionaires, clearly likely going to lead to some calls in Congress for some kind of reform.
Yeah, you follow the tax code as the Congress created it, and then they act like you've done something wrong when you actually followed it. What kind of sick world do we live in? By the way, if you want to take it next level, you create a trust and make the trust the beneficiary of your Roth IRA. And then when you're ready for the money to come out, you can go straight into the trust. That's the next level stuff. You can go get started now, and the donations. When you contribute to a Roth IRA, you by the end of the year, it's like $7,000, I think, every year. So you have until the end of this year, otherwise you'll lose that $7,000 opportunity. You can go and open one at my partner, iTrustCapital. I did. Go to iTrustCapital.com/XRPArmy, and you can get a $100 funding bonus too by going through that link. Check it out. Gold is back above 4,250 dollarinis. That's wild. Look at this. Why first mover advantage can be so important in ETF space. Canary just issued a press release stating that their XRPC, which is their XRP ETF, is larger than all other spot XRP ETFs combined. What we're seeing with XRPC is that more the early adoption, it's validation of where investor demand is heading. Investor demand is heading to XRP, folks. It's pretty clear. Here's Tom Lee talking about what he thinks is going to happen by January.
Do you think you'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah, in fact, I think it was looking good, like you said, over the weekend, and then we got a decline, sorry. Maybe because the Bank of Japan looks hawkish.
Yeah.
But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to. And that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
All right. This is an interesting clip. This is from Ondo Finance.
So if this is in fact approved by the SEC, what would change? Do you anticipate that other major exchanges will follow suit?
So I think what really we're not looking at kind of upending the system. We want everyone to come along with us for that ride and bring that and bring kind of tokenization more into the mainstream. But we want to do it in that responsible investor-led way first, under kind of the SEC rules themselves. So we think that we are kind of looking at pushing this at the forefront of innovation. We've been at it before. We are kind of the original innovator in this ecosystem. When things moved from paper-based to electronic form, we were the ones that kind of brought that into the market. And it's evolutionary. It's not really revolutionary. So we look at it as how can we evolve the system to really bring forth the benefits of it while really looking at how do we maintain the regulatory, the guidelines and the guardrails that have existed for decades.
And that is the head of digital assets at NASDAQ. Look at this from the Digital Euro Association. Ripple's RLUSD, backed by the dollar, has gained approval as an accepted fiat reference token in the Abu Dhabi global market. Then we had the Singapore news recently. This thing is on. Now, this is the MicroStrategy hit job explained. And before you watch some of it, I can't imagine why JP Morgan and Wall Street would have seen MicroStrategy as a prime target.
The MicroStrategy hit job we've been talking about might have been real. JP Morgan and Morgan Stanley just launched leveraged Bitcoin-backed products tied to BlackRock's IBIT. This is right after freezing MicroStrategy transfers and increasing margin requirements to 95%. You can't make this up. They didn't just compete with Saylor, they kneecapped them first. This timeline checks out, and it looks like a coordinated setup. We're going to break it down today. This is Dante Cook with Bitcoin Simply. Short MicroStrategy trade.
Michael Saylor is a wonderful salesman, but that's what he is. He's a salesman. And what he's selling investors is the concept that you give me your money and I'm just going to go buy Bitcoin. And hopefully the value of my stock trades at a premium to the value of that Bitcoin. And so as long as I can keep doing that, I generate value. And this is, of course, I called it financial gibberish because on top of that, he also said in your interview, he said, the company should not just be valued on the basis of the Bitcoin holdings, but on a multiple of the profits that accrue from when I do this financial alchemy. And I pointed out on social media, I said, well, that's akin to saying, well, my house that rose in value from $450,000 to $500,000 last year is not worth $500,000. It's worth $1.5 million because it's worth the $500,000 plus a 20 multiple on the $50,000 increase. And of course, That's absurd. But that's the claim he's making. And let me just interject really importantly here. I'm actually doing what he is advocating, right? I am selling MicroStrategy securities to buy Bitcoin. Let's be clear, it's a hedge trade. I don't know where Bitcoin is going to go.
And it doesn't matter to you, actually.
It doesn't matter. The premium compressing matters to me. It's important to understand that in 2024 and 2025, mostly at the end of 24 and 25, MicroStrategy has sold $35 billion roughly of securities, $33 billion in common and convertible into common, and $2 billion in preferred, most recently. The market for the preferred stock that he's selling is tiny relative to common. Let's be clear about that. And in his own words that you just played back, he makes a case that you have to be crazy to buy these preferreds, right? He's going to pay you a dividend, maybe. It's not redeemable. It's perpetual. And if I don't pay the dividends, they're not cumulative. I don't have to pay the back dividends. So, who in their right mind institutionally would buy these preferreds?
He called it a hedge. But what we know about big banks,
I think that guy summed it up pretty well. The whole thing's crazy, including all of his Jesus and Pope, portraying himself as Jesus and the Pope. Of course they're going to target him. And I think Paul Barron kind of has it here. Michael Saylor's MicroStrategy now holds 650,000 Bitcoin, already more than 3% of Bitcoin's fixed 21 market cap. At the current accumulation pace, a 5% share of all Bitcoin within the next decade is a realistic outcome, especially as new issuance slows and more coins are permanently lost. That would mean a single corporate balance sheet controlling roughly 1 out of every 20 Bitcoin that will ever exist. Is this the ultimate bullish supply squeeze for holders, or the beginning of a new kind of centralization risk within a supposedly decentralized asset? Oh, that's exactly what's going on. Look at Peter Schiff taking it next level. Today is the beginning of the end of MicroStrategy. Saylor was forced to sell stock not to buy Bitcoin, but to buy US dollars, merely to fund MicroStrategy's interest and dividend obligations. The stock is broken. The business model is a fraud. These are his words, not mine. And Saylor is the biggest con man on Wall Street. Uh-oh. Look at Black Swan Capitalists. As long as crypto remains coupled to Bitcoin, the entire market is held hostage to a single asset's volatility, limitations, and narrative. Reminds me of when CZ Binance says when the Titanic sinks, little floats near it get dragged down too, but the floats will eventually come back up if they are untethered. Almost like he was warning us, and then Michael Saylor had put this out. Okay, we're going to go into DAIXRP.com. That's the Patreon. If you'd rather join through YouTube, click join below any of these videos, or you can join through X by hitting subscribe. We do the full video plus the extended video, and you don't have to watch any commercials. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. Here we go.